Yes. Hello everyone. In this video, we'll be reading about journal chapter, class 11 accounts, journal chapter. The first chapter in accounts for class 11 students, which will be useful. This is a basic step. After learning journal properly, only they can do the various chapters in the accounts. Business transactions are first recorded in the books of original entry, that is referred as journal. Okay, whatever the business transaction are taken place that are recorded in the books of original entry, which is known as journal, in a chronological order. Okay, whatever business transaction taking place on whatever dates, they are recorded in the journal according to their dates. Whatever the first transaction, suppose on April 1 first transaction, next April 4, next April 7, so date wise, okay, in a chronology order, the transaction recorded in the books of original entry referred as journal. Journal format, if you may have seen in various books also. What is the basic format of the journal? The format is date, particulars, LF, debit, credit, and in the top of the journal we have to write in the books of the name of the person in the books of journal. Okay, in this is the basic format of drawing a journal. When we do journal, I have said in the format of journal that two things are there: debit column and credit column. How you will put the accounts in the debit side or credit side, how you will decide. For deciding that, we have some traditional classification of accounts. Okay, traditional classification accounts. If you remember this traditional classification account in any journal, you can do it in a very simple manner. Okay, under traditional classification of accounts, you are having three categories, three groups: personal, real, nominal. Personal, real, nominal. Personal account, real account, nominal account. Under personal account, more three types are there: natural personal account, artificial personal account, and representative personal account. Under personal account, three types are there. What do you mean by personal account? Personal account refers to the accounts of individual firms, companies, entities, etc. Example, like somebody's name, like Ram, Krishan. Okay, the name of the persons are given. Okay, capital, drawings, this all comes under the heading personal account. Under personal, I said na, three types of account: personal, real, nominal. Personal account, natural personal account, artificial personal account, and representative personal account. What is natural personal account? Natural personal account, with the name natural only you can understand name of a particular living being. Okay, like Ram, Krishan. Such natural person's name, if it is there, then it is will come under natural personal account. Artificial personal account refers to the name of the companies, name of the firms. Okay, like Amar Stationaries, Pilot Pens Limited. These are the examples of artificial personal account. Third is representative personal account. It consists of group of person, like outstanding salaries. Outstanding salaries account, it is what? It consists of group of person who have not received a salary yet. The outstanding salaries account, prepaid insurance account, accrued commission account. Okay, these all are examples of representative personal account. Is it clear? So all these three types, okay, all the three types of personal account, they have a rule. What is the rule for personal account? The rule is that debit is the receiver, credit is the giver. In case of personal account, if you have got a personal account in a transaction, so when you pass the journal entry, how you will decide which side to write, whether you have to write in debit side or credit side. The rule for personal account is what? Debit the receiver and the credit is the giver. The one who is receiving, he will be debit, and the one who is giving, he will be the credit. Okay. Next come real account. What is real account? Real account consists of all the tangible and intangible asset. Tangible which you can see and touch, intangible which you can't see and touch, like goodwill, okay, copyright, patents, okay. These all are what? Intangible assets. In case of tangible or intangible assets, what account comes? Real account. This comes under the real account heading. What is like example of tangible example? If I give land and building, vehicles, furniture, this all comes under the real account. What is the rule for real account? Rule for real account is that what debit what comes in, whatever is coming in, land, building, machinery, whatever is coming in will be debit. Debit what comes in and credit what goes out. This is the rule for real account. Okay. Next is nominal account. Nominal account includes all the expenses, losses, income and gains. Expenses, losses, income and gains, like salaries, rent, interest received, discount allowed. This all comes under the heading nominal account. Okay. Salaries, okay, rent, purchase, sales, commission received, this all comes under the heading nominal account. For nominal account, what is the rule? Nominal account rule is the debit all expenses and losses. Debit all expenses and losses will be there, and credit what will be? In the credit side will be all incomes and gains. In case of nominal account, simple rule: debit whatever expenses and losses are there, that will come in the debit side, and whatever income and gains are there, it will come in the credit side. Now we are moving to few journal entries, few typical journal entries I will be discussing with the question, and then I'll be saying the answer. Like first transaction in most of the questions you'll be getting, cash introduced in business means the owner, okay, he's introducing particular amount in business, okay. So whatever money the owner is introducing in business, it is termed as capital. In accounts we term it as capital. So when the owner is introducing money in the business, for that what is the journal entry? Before saying the journal entry direct, I want to explain. See, this transaction, cash introduced in business. When you're reading cash introduced in business, under these two accounts are coming. What are the two accounts? One is the cash account, cash has come, cash is introducing, and the second account which is coming, capital. Why? Because this is the amount of money which the owner is introducing in business. The two accounts which are coming in this transaction is cash and capital. Cash and capital. Capital is what? Capital is personal account. Capital is a personal account, and cash is what? Cash is a real account. Cash is a real account. Now you see, capital is a personal account, cash is real account. What is the rule for personal account? Debit the receiver, credit the giver. So capital is the amount of money which the owner is giving into the business. Okay, capital is the amount of money which the owner is giving to the business. It will come in the credit side. And cash is what? Cash is real account. In business, money is coming. In business, you are getting the money. So cash is real account. Under real account, the rule was what? Debit what comes in. So money is coming in the business, to cash account debit to capital account. This will be the journal entry for this transaction. Okay. Money introduced in business as capital. The journal entry will be cash account debit to capital account. Clear? Next, suppose the entry is deposited 10,000 in bank. Suppose you are depositing money in the bank. Okay. Bank is a personal account. Cash is a real account. So when you are depositing money in the bank, two accounts which are coming in this transaction is what? One is bank and other is cash. So bank is what? Personal account. Debit the receiver. The bank is receiving money, the debit side it will come. Cash is what? Real account. And real account, what was the rule? Debit what comes in, credit what goes out. So here cash is going away from you. So here what will be? Cash will come in the credit side. So entry will be bank account debit to cash account. Deposited money in the bank. Next, suppose entry is there. Purchase goods in cash. In case of purchase, two things you have to be very clear. When it is mentioned in the question that goods have been purchased for cash, then it is a cash purchase. But in the other way, the question is given in such a way that purchase goods from Rahul. Purchase goods from Rahul. So in this question, what they have said, they have just mentioned the name of the person from whom you are purchasing good. They have not mentioned the mode of payment. So what you will assume, this is what? This is credit purchase. When they have not mentioned the mode of payment and just they have mentioned the party name from whom you are purchasing, in that case, what will be there? In that case, you will assume it that it is credit purchase. So here, purchase goods from Rahul is a credit purchase, and when it is written purchase goods for cash, it is cash purchase. So in case of cash purchase, simple entry. See, in case of cash purchase, when you are purchasing goods, two accounts are involved. One is cash and the other is purchase account. Cash is a real account. Money is going away from you. Real account rule is what? What goes out will be in the credit side. So cash will be in the credit side, and purchase is a nominal account. Purchase is a nominal account. Under nominal account, the rule was what? Debit all expenses, credit all income. So purchase is a expense, so it will come in the debit side. So entry for purchase goods for cash, the entry should be purchase account debit to cash account. Clear? Now, in case of if the goods are purchased on credit basis, okay, purchase goods from Rahul. I'm giving just example. Okay, when you're purchasing goods for cash, the entry was purchase account debit to cash. Now, what is happening when you're purchasing goods from Rahul? Credit purchase. So here which two accounts are involved? One is the purchases, okay, and the other is the party from whom you're purchasing. Means the Rahul. You're purchasing good from Rahul. So Rahul is a personal account, purchase is a nominal account. Rahul is the one who is giving the goods. Now, when you are purchasing goods from Rahul, he is the giver. Means he will be coming in the credit side. Credit the giver, debit the receiver. Personal account, this is the rule. So Rahul is the giver, so it will come in the credit side. And purchase is what? Purchases is a nominal account. And under nominal account, the rule is what? Debit side expenses will come, credit side income will come. The purchase will come in the debit side and Rahul will come in the credit side. Purchase account debit to Rahul. Is it clear? Next, same for sales also. When you're selling goods for cash, which two accounts are involved? When you're selling goods for cash, two accounts are involved. One is cash and the other is sales. Goods are sold for cash. So cash and sales account. When you're selling goods for cash, the money is coming to you. Two accounts, cash and sales. Money is coming to you. Cash account is a real account. Real account, what comes in will be debit. So cash will be showing the debit side. Cash account debit. And sales is what? It is a nominal account and it is a kind of income. When you are selling goods, you are income. You are generating income. So it is a nominal account, and nominal account rule is what? Credit side or income is shown. The entry for sold goods in cash, the entry will be cash account debit to sales account. Cash account debit to sales account. This was the cash sales. Now, if there is credit sale, I have said cash purchase, credit purchase. Similarly, there can be cash sales and credit sale. In case of credit sale, example, sold goods to Rahul. Now you're selling good to Rahul. So in this case, you see mode of payment is not mentioned. No, either check or cash not mentioned. So this is what, this is credit sale when you're selling goods on credit. So in this case, what will happen? Rahul is one account and the sales is the other account affected. So when two accounts which are affected is mentioned, Rahul is a personal account and sales is a nominal account. So when you are selling goods to Rahul, so Rahul is receiving the good. Rahul is a personal account and he is receiving. So debit the receiver. So Rahul account debit to sales. Why to sales means, why sales we are writing the credit side? Because sales is a income and it comes under nominal account. Nominal account, whatever income is there, it is shown in the credit side. Is it clear? So credit sale entry will be what? Rahul account debit to sales account. Okay, Rahul is receiving the goods, so Rahul account debit to sales account. Next, more few entries. Purchase return and sales return. You have sold a good to Rahul. Okay, now he is returning goods due to some defect or what. Okay, you have sold a good to Rahul and he is returning because of some defect. Okay, then in that case, what is happening? That is, you have sold goods and he is returning. That is what? Sales return. Yes or no? That is sales return. So when you are receiving, when you have sold goods, now you are getting back. Okay, so two accounts which are involved, one is sales return and another is the person who is giving back, that is Rahul. Sold good to Rahul, you are getting back. So Rahul and sales return, these two accounts are getting affected. So Rahul is the giver, credit the giver. Rahul is giving the goods, so he is the giver, so it will come in the credit side. Rahul credit side. Sales return, it will come in the debit side. What is the simple explanation? Simple explanation is that sales we have written in the credit side, so sales return will be in the opposite side. Sales you always write in the credit side. Okay, means in the credit side as it is an income. So sales return, what it will be showing the opposite side, means in the debit side. So entry will be what? When you are getting back the goods which you have sold, the entry will be sales return account debit to the person from whom you are getting back. Sales return account debit to Rahul. One more thing, sales return other name is also there, you might get in the question. Sales return other name is return inward and purchase return other name is return outward. Okay, so sales return other name is return inward and purchase return other name is return outward. Okay, next, same for purchase return. In case of purchase return, what will happen? We have to just to shoot the sales return. In case of purchase return, you see, suppose you have sold you have purchased goods from Rahul, now you're returning the goods to Rahul. So Rahul is getting the goods back to Rahul account debit. Correct. Rahul is getting back the goods you have purchased from Rahul and now you are giving back the good to Rahul. So Rahul is getting back, it will be Rahul account debit. Purchases we have written in the debit side, automatically purchase return will be written in the opposite side, means in the credit. The entry will be what? Rahul account debit to purchase return account. Rahul account debit to purchase return account. I hope it is clear. Next. Normal, whenever you're paying expenses like telephone expenses, electricity bill, whatever you're paying, so simple, as it is an expense, nominal account expense, it will be showing the debit side. Like you have paid salaries in cash. Salaries in cash, what will be the entry? Simple, salaries is an expense, so nominal account expense is showing the debit side to salaries account debit to cash account, as cash account is real account and cash is going away from you, it will be showing the credit side. Clear? One more thing, yes, you will be seeing two things in the chapter of journal: trade discount and the cash discount. Trade discount and cash discount. Trade discount, we do the calculation in the working note, but we do not show any specific entry of trade discount in the journal. But cash discount, we show the entry in the journal in the form of discount allowed or discount received. Okay. For example, a person is selling goods of 5,000 rupees at the rate after deducting 10% trade discount, and then he's also, when he's selling goods, okay, so he's also allowing 10% of cash discount. Okay. So what you will do in the working note, you will charge trade discount first. First you will charge trade discount, you'll get the selling price. Okay, on list price you'll charge 10%, is 5,000, 10% if you do, it will come 500. Means 5,000 minus 500, 4,500 is the worth of goods you are selling. You are selling goods of worth how much? 4,500. 4,500 rupees goods you are selling, and out of that 4,500, extra 10% cash discount you are allowing. Okay. So when you will be showing the journal entry for sales. So you'll be showing what amount? You'll be showing 5,000. No, you'll be showing the amount after deducting the trade discount. Means you'll be showing 4,500. Entry will be what? If you have sold the goods at cash, the entry should be cash account debit to sales account. Amount will be 4,500, 4,500, not 5,000. Is it clear? Next, when you yes, this is the entry. Now, as you have allowed cash discount, so it is what you are allowing discount. Okay, so it is what discount allowed. Yes, you have sold goods at 10% discount or 4,500. You will charge 10% discount. So you are to allowing discount. Okay, so discount allowed is what? It is an expense. It will be showing the debit side. The correct entry should be what? Cash account debit. Whatever money you are receiving, whatever discount allowed means whatever you have given discount to someone, it will be written in the debit side. Discount allowed is what? Is it an expense? It will be written in the debit side. Cash account debit. Discount allowed account debit to uh, your you have sold the goods to sales. Okay. Next, suppose you have withdrew goods from the business for personal use. You have withdrew goods from the business for personal use. So what should be the entry? You are withdrawing means you are using the goods of the business for personal use. Like, then in that case, what should be the entry? Whatever money or whatever things you are withdrawing from business for personal use, for that one account comes that is referred as drawings account, opposite of capital account, that is drawings account. Drawings account, capital we show in the credit side, drawings we show in the debit side. Okay. Drawings account comes, and when you're withdrawing goods from the business, the drawings account will come and the other account is coming, that is purchase account. When you're drawing goods from business, why purchase account is coming? Because whatever goods you have purchased in the stock, whatever goods you're having, that will be to getting reduced, so that's why purchase account is coming. And in case of capital, what was happening, you may have remember, in capital is what amount of money business which owes, means which business is getting from the owner and which business has to give it back to the owner. And capital, what is happening, in drawings case, what is happening? The owner is taking back certain amount. So if he is taking back certain amount, what is happening? Your liability is decreasing. So from means business liability is decreasing. Why? Part of the certain amount of the capital the owner gets back. So his capital amount will decrease. Capital from drawings amount is deducted from the capital in balance sheet actually. Okay. So here, as he's taking back the goods from the business, the entry will be what? Two accounts are involved, drawings and purchase. Drawings will be showing the debit side. Purchase is a nominal account. We should show in the debit side. But here what is happening? Purchase is getting reduced. Purchase value, purchase worth, whatever the purchase you have kept, that is getting decreased. In that case, what will happen? It will be showing the credit side. Okay. Drawings account debit to purchase account will be the correct entry for this. Is it clear? Yes. Suppose some amount of money it was due from anyone. Okay. Suppose you are supposed to receive some 5,000 rupees from Rohit. Now you are not able to get that. You were expecting that you will receive 5,000 from Rohit. Now it is said that he has become insolvent and he is not able to pay the money. So what will be the journal? Whenever you are expecting the money to get, and if you are not getting the entry, one account which is coming, that is bad debt. Okay, means you are expected to get the money, but now you are not getting the money. For that, the entry is bad debt account debit, as it is an expense for the business. Bad debt account debit to the name of the person from whom the money you are not able to get. Okay, bad debt account debit to Rohit. Okay, because he was your debtor. Rohit was your debtor, means you were expecting to receive money from him, but now it is what happening, he is not able to give. So as he was debtor, your debtor is decreasing, so you have to pass in the you have to write that account in the opposite side, means in the credit side to Rohit. Bad debt account debit to Rohit. Clear? One more is the goods given as charity. When you are giving goods as charity, the word comes donation or charity. Donation account debit to purchase. Why to purchase? Why purchases is decreasing? Means whatever goods you have purchased and kept in the stock, that is to getting decreased. So that is why purchase is shown in the credit side. Charity account debit or donation account debit to purchase account. Distribution of good as sample. When you're distributing good as sample for advertisement, the entry will be what? Advertisement account debit to purchase account. We are distributing goods as sample, the entry will be advertisement account debit to purchase account. In this case also same thing is happening now. Goods are decreasing. Whatever goods you have purchased and kept in the stock, that is to getting decreased. That's why purchase account came, and advertising is also an expense for the business. The advertisement is an expense. That is why it is showing the debit side. Advertisement account debit to purchase account. Next, suppose you have insured a goods. Okay, goods you have insured. You have the insurance of the good, and now that goods are getting lost due to fire or accident, whatever may be the reason. So in that case, three specific journal entries you have to do. Okay, 3 to 4 specific journal entries. Whenever goods are lost due to fire or theft, you have to pass one specific entry. What is that entry? The entry is loss of stock by theft or fire account debit to purchase account. As you have purchased and kept with you, and now it has been lost due to fire or theft. So what is the entry? Loss of stock by theft or fire account debit to purchase account. Purchase is getting decreased. That's why. And now if the goods are insured, then more specific three entries you have to do. What are the three entries? First, when you're lodging an insurance claim, goods got theft, fire, due to that goods got damaged, then for that you have to lodge the insurance claim. For lodging an insurance claim, the entry is insurance company account debit to loss of stock by theft or fire account. As the goods have been lost due to theft or fire, so you have to lodge a complaint in the insurance company. For that, what is the entry? Insurance company account debit to loss of stock by theft or fire account. Second, when you have lost the company and now you're receiving the claim, when the total amount of claim is received from the insurance company, the entry should be bank account debit to insurance company. Suppose 3000 rupees worth of goods has been lost due to theft or fire. It may happen sometimes the insurance company will not provide you the entire 3000 rupees. They may give you less than that, means 2500, 2800. If you get the entire claim, whatever claim you have applied, and you have get the entire claim, means 3000 was the worth of the goods which got damaged, you are getting whole 3000 rupees. Then that case, what will be the entry? Entry will be bank account debit to insurance company account. Clear? But in case if the entire amount is not being received, okay, you are receiving the part of it and part you are not able to receive, the entry will be bank account debit, loss of stock by fire or theft account, in bracket you will write profit and loss account debit to insurance company. Clear? In bank account you will write the amount which you are receiving. In loss of stock by theft or fire profit and loss account, you'll mention the amount of money which you are not able to receive. And in to insurance company, in the credit side, you'll mention the full entire amount. Okay. Yes. Next, in case of purchase, when you're sorry, not purchase, sorry, outstanding expenses, when there is outstanding wages or outstanding salaries mentioned in the transaction, mentioned in the question, what entry should be there? In case of outstanding expenses, simple entry is there. Expenses account debit to outstanding expenses account. Suppose there is outstanding salaries. So what should be the entry? Entry should be salaries account debit to outstanding salaries account. Okay, this should be very much clear. As outstanding expense is liability for the firm, it is showing the credit side. Okay. Any increase in the liability is showing the credit side. Okay, and any increase in the asset is showing the debit side. This is under the modern classification of account. These all rules are given. Okay, we are following the traditional classification: personal, real, and nominal. In case of any prepaid expense, means in advance, if you are paid, any expenses paid in advance is referred as prepaid expenses. So in case of prepaid expense, what will be the entry? In case of outstanding, entry was what? Expenses account debit to outstanding expenses account. So in case of prepaid expense, the entry should be prepaid expense account debit to expenses account. Means suppose there was prepaid rent. So what should be the entry? Prepaid rent account debit to rent account. Prepaid rent account debit to rent account. Okay. Prepaid expense is an asset for the business. So if asset increase, it is showing the debit side here. The prepaid expense is what? It is an asset. You have paid a money in advance. Whatever money you are paying in advance means you have what? That is an asset for the business. Okay. Next is depreciation. Suppose a machine is there, okay, it is getting depreciated year after year at a certain percentage. If there is a mention in the question, depreciation of machine, charge depreciation of machine at a rate of 10%. So for depreciation, what entry is this? Journal entry, depreciation account debit to the fixed asset, whatever the name, machinery, whatever. Depreciation account debit to fixed assets account is the basic journal entry. So this was the common introduction of the chapter journal.